Hello and welcome to the Weekly Forex Outlook at xm.com. Next week, all eyes will be on the non-farm payrolls data out of the US, as well as the Bank of England's policy decision. In addition, we'll get the Canadian jobs report, which will be important for the Bank of Canada's next move. I'm Maria Pachardis, and joining me is senior market analyst Haralambos Pissouros. So Haralambos, let's start in the US, where tariff headlines continue to drive the US dollar, along with the Fed's decision this week to keep rates unchanged. We'll get non-farm payrolls data for January on Friday. What are we expecting there, and how might those figures impact the Fed's path and the dollar going forward?
Hello Maria. Yes, indeed, tariffs remain among the main drivers for the US dollar. We've seen the dollar sliding whenever we get headlines that Trump may adopt a softer approach, and we've seen rebounds whenever he toughens his stance. Investors are now likely to stay nervous today, and we may have markets opening with gaps on Monday, as tomorrow is the day President Trump has said that he will impose 25% tariffs on Canadian and Mexican imports. So in the midst of all this uncertainty, the Fed kept interest rates on hold, with Powell saying that they are in no hurry to make further adjustments, adding that they will wait for more clarity on the economic front as well as on government policy. So, with all that in mind, attention next week is likely to fall on the non-farm payrolls report for January, and another round of strong employment and wage growth could intensify concerns about the resurgence of inflation, especially if Trump kicks off the tariff game on February 1st, tomorrow. Market participants are likely to start doubting again whether two rate cuts will be needed this year, which could allow the US dollar to extend its latest recovery.
Moving over to the UK now, the Bank of England is set to announce its policy decision on Thursday. What's the state of the economy in the UK at the moment? What are we expecting from the BoE, and how might the pound be affected?
Following the concerns about the new government's fiscal plans, the cooler than expected inflation numbers for December and the sluggish UK growth prompted investors to pencil in around a 90% chance for a quarter-point rate cut at this gathering, while anticipating nearly another 2 by the end of the year. That said, both the headline and the core inflation rates remain above the bank's objective of 2%, with the core one standing at 3.2% year on year. What's more, although the surge in bond yields was largely reversed, the pound recovered only a portion of its losses. It is actually the worst performing major currency so far this year, posing upside risks to UK inflation. So, even if the well-anticipated rate cut is delivered, it may be a hawkish cut, with the Bank of England revising up its inflation projections. This may disappoint those expecting another two rate cuts this year, and it may allow the pound to gain some more ground.
Turning to Canada now, the BOC cut interest rates by another 25 basis points this week and noted that they're concerned about US tariffs. Can you tell us a bit more about that and how the Canadian jobs data due out on Friday may impact the BOC's future rate path?
Yes, due to tariff concerns, the Bank of Canada revised down its growth forecasts, but they also said that tariffs could result in higher inflation. This led market participants to pencil in around a 50% chance for policymakers to take the sidelines at the next policy gathering in March. In other words, the Bank of Canada may find itself between a rock and a hard place, and I believe that Friday's jobs report may help tilt the scale towards a pause or another rate cut, depending on whether the data will come in strong or soft.
And finally, is there anything else traders should keep their eyes on next week?
Yes, it is. On Monday, the Eurozone flash CPI data is coming out, and should it reveal cooling inflation, the 85% probability for another quarter point cut by the ECB in March could go higher. Elsewhere, during the Asian session Tuesday, New Zealand's employment report for the fourth quarter could prove determinant on whether the RBNZ will cut by 25 or 50 basis points at its upcoming meeting, while the following day, Japan's wage data for December could shape expectations about the Bank of Japan's next rate hike.
Hi, Olympus, thanks so much. This was the Weekly Forex Outlook here at XM.com.